So, Andre, you're up first with the hot topic of the moment, and that is the BOJ's interest rate cut. They have moved it down to 6.5%, another 25 basis points. What's your reaction to that move?
So first of all, 25 basis points to 6.5% is actually good news for the markets overall, which brings us to 50 basis points year to date, right? And I think the last time I presented was around the time when BOJ would have made an adjustment too. And I did say that in previous communication, they highlighted that they will be actually making changes to the monetary operations to allow for adequate liquidity levels to remain in the system. So far, we've seen where the 30-day CD rates actually fell to 6.75%, which since the last report would have been, as my last report, would have been roughly about 120 basis points. So it is a trend in the right direction. And I should probably present it now too that yields in April of this year would have been somewhere, I think, 11.9%. So that would be north of 500 basis points reduction that we'd have seen in the CD rates, well, at least since April, all right? What it means is that overall, we expect that cost of funding should start to decline. We had the comment earlier about how long it might actually take to filter into the system. But as long as the BOJ continues on this trajectory, we expect that rates in the markets should actually start reflecting lower, because the benchmark starts to move in that direction. We have to be mindful, though, that the inflation story is still something that the BOJ is faced with. Remember, point-to-point inflation in August was actually 6.5%. Against a 5.1% the previous month, and that 6.5% is actually the highest that we would have seen since, I believe, March or January into February of 2024. So it's a game that we have to be monitoring carefully because when we talk to the analysts here, the expectation is that it might be somewhat of a slight challenge for the BOJ in terms of especially inflation heading into the latter part of 2025, going into as early as maybe about March. So it's still something that they have to deal with. We still have to be mindful too that Fed rates might actually be something that will have to be monitored, because we don't want a case where BOJ starts reducing rates too drastically, and then the gap actually widens on the US side. So we might actually end up with capital flight, and it's not a concern for like the regulated entities, because they actually are regulated in terms of the amount of dollar assets that they're allowed to hold. But then there are other, I don't want to say unregulated, but corporates that, are not necessarily bounded by the BOJ guidelines, and actually individuals too, because they do form a part of the market. Those types of money might actually, put a little pressure on the exchange rate.
So explain that correlation or that connection that you mentioned, that if we are too far below where the US interest rates are, you said there could be capital flight. So explain how that works.
Right. So as investors, I didn't hear that. Sorry.
I said, first of all, what does capital flight mean?
Oh, right. So as investors, we always try to get the best bang for buck, right? Meaning that you want to get the better interest rate, as well as you want to. It's not something that we take into consideration a lot as we should, but you also want to own the safer assets. Now, if investments in US becomes more attractive than in Jamaican dollars, what you might find is that a lot of the entities that are allowed to do so will actually convert to foreign exchange. And while you may not actually find assets on the domestic side, some of that money might actually migrate out of the country. So that interest rate differential that we talk about a lot, the capital flight is converting from the domestic currency into the foreign currency, and sometimes actually it might leave our shores as well, right? Now, to talk about that a little bit, the BOJ has actually intervened 31 times this year, right? Which is roughly about 7% of the overall market volume. So I believe that they've demonstrated enough commitment to actually ensuring that there's stability in the domestic currency. But again, if the gap widens between the two currencies in terms of interest rate, what it might mean is that they will have to be forced to use more of the NIR to actually defend the currency a little bit more. We still have to deal with the geopolitical tensions today. Israel and Hezbollah, that escalated. We don't know how wide that might go, but it still is something that we have to consider. As reading an article earlier, just a few minutes ago, where the port strikes in the US is actually something that our domestic ports are actually reporting that if it actually widens, it might actually affect us even more. And I don't need to talk anymore about the supply chain issues, because I think that the media has exhausted that quite a bit with the whole COVID situation. But all in all, I'd say that the BOJ interest rate reduction is a step in the right direction. We are certainly hoping for more, but the factors that I mentioned probably will be measured against the approach that the BOJ will take within the near term in terms of additional rate reductions.
That port strike is something that we definitely need to keep our eye on, because that could mean major global disruptions. And we all see, remember what happened during COVID, right, with disruptions. Will the equities market improve with this minimal cut in interest rates? Andre, you're muted.
Sorry.
There you go.
I'm here chatting away. Right. So it should, in fact, we've been seeing where there are some beginning of portfolio shift actually happening, but just 50 basis points is probably not enough to say yes, we are in the middle of interest rate reduction cycle. I think we're still in the fairly early stages, but there are portfolios that are actually moving towards equity because they believe that the lower cost of funding should actually translate to better or improve the balance sheets, not just because persons are actually borrowing lower, but for those who actually own assets like maybe bonds, those bonds are actually moving higher because the change in overall market yield would actually improve the prices on those instruments. So it bodes well for your financial stocks as well, because it should take a little bit of the pressure off of the cost of funding. But then there are other stocks that would be largely financed by longer term funding. Those probably will be looking to renegotiate those terms, and we may see improved balance sheets. So yes, it should actually translate into that.
And final word on that, David. I know you're itching to comment.
So just for some context, Proven Group, their business started on something called carry trade. So they would borrow in Jamaican dollars, convert to USD, and buy US dollar assets, and they benefit an appreciation and high interest rates in the US market. So keeping that balance between your domestic market interest rates and another central bank's rates is a natural phenomenon that happens in different markets, and it has to be done very carefully, because if rates come down too quickly in Jamaica and the differential is too small, you're going to have further pressure on the dollar. So for person to check the Bank of Jamaica's FX rate for 158.81, and as Andre pointed out earlier, the BOJ has been intervening in the market like crazy to be fixed it. Like they take a bat, swing at the pinata, and the rate is still not coming back down. Like when the year started, we're at 154 to 1, we're at 158.81 now. It may not sound like much, but some businesses heading into next year, they're budgeting higher prices in their budgets right now because of where the FX rate is. So interest reductions are good because they can borrow cheaper, but it has to be done in a particular fashion and manner by balancing other case factors, just so that you don't have any other levels of instability in the economy, because the port strike, cement disruption, and just the geopolitical tensions right now, we're seeing oil prices trend back up a little bit right now. So the BOJ has to be cognizant of all these factors when they adjust their rates.